Hello, hello, hello. Let's get the microphone check out of the way here. Let me know if you can hear me across the various chats, including the public chats on YouTube and Twitch. For those of you that are on Twitch, I suggest that you join the YouTube. It's Landy's Crypto Corner. You can find the link on the profile page there on Twitch. Go ahead and subscribe there, and you can jump in the chat if you want to chat. I don't have a good way right now of monitoring both chats, so I primarily will be looking at the YouTube chat for public chats. But go ahead and let me know if everyone can hear me okay, and then we're going to get started here in about 30 seconds. All right, so it seems that chat can hear me okay. And let's get the music under control, and we'll get started in just a moment here. All right. Okay. I need to make sure I actually get the right layout up for you guys, so you're not just staring at the starting soon screen. And hello, and welcome to Landy's Crypto Corner. Today is a Friday Bitcoin Technical Analysis live stream for December 8th, 2023. I'm your host, Landy, and we're going to be taking a look at Bitcoin, Dixie. We'll also take a look at gold and traditional markets, and at the end, I will take some requests for TA on whatever it is that you'd like me to look at. Now, if you watch the Bitcoin in 60 seconds videos, otherwise known as the Bitcoin daily price target videos here on YouTube, they're in the shorts section. You'll recognize this chart. This is the one that I use during those videos. So you can find it on x.com under CryptoLandy, or here on this main profile page under the shorts tab. Typically, I will try to do one every day after close to give you an updated view of what is going on the charts, what I'm looking for in terms of continuation and reversal and or pullback areas. And in this case, Bitcoin did hit the very first pullback area that we discussed in the previous live stream and on the Bitcoin in 60 seconds videos. So we did see Bitcoin come down and tag 43.2, even wick slightly below, down to 42.850 or so, but it did close above. And when I'm discussing the targets in those videos in the context of continuation, either to the upside or pullbacks, in this case to the downside, that is going to be on a closing basis. So if Bitcoin had closed under the weekly here at 43.2, then the next main target would be that 41.8 to 42K by the upper first here. And same goes for this candle today. If it does close below 43.2, then that would be the main target down here by the upper first at 41.8 to 42K. And if it does close above the upper second here, which is now at around 44.3 to 44.4, then I would look for a continuation, quite frankly, right back to the highs, somewhere around 45K to the monthly here at 45.5. If it got above there, either on a wick, but especially on a close, then I would start to target the next monthly here at 47K to the monthly swing high up there at 48,240 to around 48.5. Now, I will say Bitcoin, as it stands right now, is in a position where we're likely to see residual continuation to the upside to retest the highs as long as Bitcoin is above those 2 weeklies. So basically the downside area to pay attention to is that 43.2 to 41.8. And this is because we see that volatility remains very high. This indicator is the BBWP indicator. It's by the Caretaker. You can find it for free in the Indicators tab. And what this does is this measures the volatility of price within the Bollinger Bands. And in this case, the more expanded the bands are, the higher the volatility is. And we can see that volatility is at a 94 and the moving average for it is at a 91%. So how does this work? Well, it's a 5 simple moving average, and what you're looking for is expansion to continue. So price action and the Bollinger Bands continuing to get expansion while we see BBWP on the rise. When we do start to see it fall, what will happen is we will get residual expansion of the bands as the basis moves up towards price. And typically when BBWP begins to fall, that's a reflection of price consolidating within a zone and or getting mean reversion. So in this case, if it goes sideways, you'll see BBWP start to cool down, get below the moving average, and then it's more likely that we will see mean reversion by price either moving sideways or the basis of the Bollinger Bands moving up towards price. That's what we saw back here prior to the breakout to the upside. We saw a nice cool down. This entire sideways and up trudge for Bitcoin here into that monthly at 38.5 was our main target. Above there was the 39 to 40K weekly. And above there, we were looking right to where price is trading right now, quite frankly. We called that one pretty darn good yet again. We've called this move every step of the way from the lows. And for those of you that weren't around for the lows and Bitcoin at around $15,500 on spot on the wick, well, we spoke about exactly that area between $15,000 and $16,000 was the main target area. And prior to that, we were calling the entire bear market move down, including picking that top at around 53.8. Once that broke down, it was pretty much over. And prior to that, we had called the accumulation to the new highs. And most of you probably remember being around, for those of you that were here in the early days of me doing this publicly. We spoke about the big move down from the distribution top up here. Confirmed distribution on the breakdown. Well, it was a lower low, lower high. Once the lower high was locked in, it was pretty much, it takes out the low, it's going to distribute. It did distribute into a Wyckoff reaccumulation on the daily. And most of you were that have been around here for the longest remember this call into this bottom. We called the rally and the spring. We called the retest, and we called the new highs. Now, granted, I was looking for like 70,000 and it got to like 69, but we weren't quite like to the dollar on that one, but we called basically every move since. Now, the reason that we're able to do this is because we have a very simple system. And the reason why I'm covering this very early today right away is because I've gotten a lot of questions like, hey, how is it? Like, I've gone back and I've looked at your videos. I've gotten a lot of DMs on Twitter, and I've asked that if you do DM me, I would actually prefer that you just kind of tag me publicly and ask me publicly because I'm getting so many that I can't. They're getting buried. I can't really keep up with it, and I have a fairly small account, and I'm getting a surprising amount of questions from you guys, and really, just to kind of recap this really quick, there's 4 main keys to trading, and the very first thing is understanding trend. Yes, you need to understand how candles work and like all that stuff, but once you do, you need to understand trend, uptrends, downtrends, trendless states where you're getting, no real clear trend. The second thing is support and resistance, and that is historical support and resistance based off of swing highs and swing lows for whatever time frame it is that you're charting. The higher the time frame, the more powerful that swing high or swing low is. And then, you can also take other areas of support and resistance. You can use order blocks. You can do all kinds of fancy stuff with support and resistance, or, liquidity zones and like that kind of stuff. But you need to understand support and resistance. And then the third piece that almost no one includes in their analysis, except for very few that I've seen in this space, is volatility. If you do not understand volatility, you are not going to be able to trade effectively. A lot of it will be guesswork and just kind of blindly trusting what you're seeing on your chart. that it will hold up. Whereas volatility will let you know, hey, I have all, support resistance. I'm sorry, trend, support resistance, and volatility are all lining up to kind of paint this picture for these particular areas. That's how we've been so accurate. It's not difficult. We're not doing anything special here. It really is simple and effective, and it's extremely high hit rate. And in fact, I've spoken with quite a few of you that have been doing this for quite a while, and hit rate is somewhere around the 90% range. And it's not, you don't even need an indicator. It's not giving you signals. It's just understanding how these three components fit into the fourth one, and that is momentum. So those are the four key pillars to trading. If you understand those four things and you practice it and back test it, and you have the indicator set up that suits you, that will give you those four key pieces of information, it's hard to miss. You got to try to miss, or you have to then concentrate. If you are missing, you got to concentrate on the psychological side of things, which is in most cases FOMO and or extremely high leverage. But we picked just about every move on every step of the way on this move up from the very lows. For those of you that have been here more recently, you've already seen that, and that's how. It's just using those four key pillars, and that is going to be, again, just so that you understand, it's trend first, support and resistance second, volatility third, and that creates, those three components create momentum. And in this case, we can see that volatility remains very high, and momentum is still extremely high and beginning to turn here at the top. This is Stochk momentum. This is not a Stochk RSI. Stochk RSI measures the velocity of RSI, whereas a regular Stochk momentum indicator tracks momentum close over close. So it reads price action, not RSI. So in this case, we can see that it is in the overbought zone. It is currently turned down with the momentum pivot at 44,540 or so. Now, it can stay in this area for quite a long time. We saw it come back down and reset in the bullish control zone and then move back on up. This is where, you can use regular Stochk, and you can, you can pair that with, kind of bullish and bearish control zones. You can throw a midline on there. And actually, this is where I prefer to use trend lines for mean reversion. You might recognize that somebody else in this space does that as well, and that would be Eric Crown from Crown's Crypto Cave. Brilliant analyst, funny guy, and I do suggest that if you enjoy my content, you'll find a lot of similarities in the way that we do our analysis. Obviously, I use different indicators. I do also use some of the same. BBWP Caretaker has done a brilliant job. He also makes indicators for Crown. And they've moved on to create some new stuff as well with a different company called Chart Prime as well. Now, I'm not as up to date on that kind of stuff, but most of the indicators that you see here are going to be free. BBWP is free. You might also note that if we come over here to this chart, we have the Landy bands. This is a free indicator. You can find it in the link in the video description of every single one of my videos. So this is my indicator. It is not publicly searchable in the indicators tab, but you can just click the link and add it to your chart. When it is finished and out of beta, then I will have it publicly available in the indicators tab here where you can search for it. But right now you do have to just directly click on the link and then add it to your favorites if you would like to use it. And just to quickly cover this, because I've gotten a lot of questions about this one as well. One, it's free. I'll never ask you for money for this indicator. And yes, it is still being worked on, and we'll be adding more features to it very soon. But it is a triple Bollinger Band set. You can come in here, and I'll walk you through just a few key pieces here because of all the questions I've gotten. I just want to kind of cover a few things. You can turn on and off all of these things in the style tab, but I have global settings. So if you want to turn Bollinger Bands off, for instance, you can turn those off, but you could leave the labels on so you know where it is on your chart, where each Bollinger Band level is, the basis, and the upper first, second, and third standard deviations. and then the lower second, first, second, and third standard deviations. You can have that on with the labels off. There's a bunch of ways to customize this. You could even pick each individual label that you would like to have either on or off. Now, this is a little buggy. You can see it if I check it off. Oh, no, I did fix that one. Sorry. And this should be the most recent version. So I didn't realize that I had already fixed it and uploaded it, but I guess I did. So you can turn off individual labels as well if you'd like. But it's got a Bollinger Band set in there. You can turn it off globally here. It also has a moving average set here. This is very similar to another one of the indicators you'll see here and in a moment, but inspiration taken from the wonderful and brilliant caretaker. And I've been in contact with him and asked him, kind of trading back and forth, like, hey, can I use some of your code? Can I at least, or reference it and creating a free indicator? And he was more than happy to say, yes, please do. But this is moving averages. You do have this available in the indicator. You can turn it on and off. You can turn off individual moving averages. You can also click the drop down and change them from EMAs to SMAs. So very similar to what you would see on a free indicator that Caretaker has out there called the moving average crossover indicator. The guy's a machine. He just keeps going with all that stuff. And then another thing here, you did note that I showed you the BBWP, which is a volatility metric or a volatility oscillator that Caretaker created. He did also allow me to use a portion of his source code to include the BBWP here. And the reason that I did that is because for those of you that can't only have a limited plan or a free plan with TradingView, and you want to use one indicator all in one package, have everything right there without having to go to multiple indicators, you can turn on the Bollinger Bands in this indicator, and then you have volatility right there, and it's one indicator. You're not having to purchase a plan to have more indicators there. Of course, this is free, so I suggest that you use it. This also has a few extra features in it. What you will see here is there's the upper second shape, lower second shape, upper third, and lower third here. This is for the Bollinger Bands. All this does is let you know if the candle, because you can see like it's very close here. Did it close above the upper second to kick off expansion? I can't tell. Well, the purple circle there lets you know that it closed above the upper second. If you see a purple circle with a red triangle, in this case upward facing, that does mean that it closed above the upper second and third, and that's extreme expansion incoming here. And you see that that's what we got here on the daily. We also got it twice in these past two candles that just put in that high at $45,000, or at least the high as it stands right now. Now let's jump into this very, very quickly. If Bitcoin were to close right now anywhere below 41.9, so that's our 41.8 to 42K area at the upper first, it's going to be a pretty strong high on the daily. And I would start to target down a bit further, maybe even to around that monthly area at $38,500 to $38,000 over time, if this local area just doesn't get swung and held up by the basis down here, which is coming in above there at $39,000, which is where a weekly is, so 39 to 40 in this case. Now you can take this wick low as an early indication that this close open right here at around that 41.8 to 42K would get tested. So if we do see any kind of a close, or if we do see price starting to trade down there below that wick low, it's more likely that it's going to go tag that area. Pretty easy, simple, and an effective way to look at things. So when and if and when, I should say, we see price getting anywhere back above this close open here, where the wick high is also coming in for this daily bear candle to the left. That was yesterday's wick high, wicked right to the close open there at 44,086 bucks. If we do see price getting above there, I would look for Bitcoin to trade back up to man, when they move things, it goofs me up for months. I would look for it to trade back up to somewhere around 44,325 or so. I'll give it a little bit of room. And above there, I would look right back to the high at 45K and higher. You can see that the upper third standard deviation is at just around that weekly at $47,000. So the daily does have confluence with that area. Now, the basis being at that 39K weekly is well above the most recent areas that were just broken out from. So we did see this this bit of resistance right here coming in around that 38.5 monthly. And then once it broke and got a close above, it was just off to the races. We got shorter term low time frame resistance right here directly at the weekly above it at 39K. Now, of course, I'm not using this chart here, but you know, to show you this, but that's this candle right here. We had resistance right at the monthly. It stepped it up and wicked right into that weekly at $39,000 and 0 cents. So $39,000 even. Once that was broken above, then it was just, you know, go and seek the monthly up top there at 45.5. It did fall short of that area, but that is still the most likely upside target to be watching next if we do see price start to recover above around the 44 to 44,500 region. So pretty simple analysis. There's not much to be said here other than, yes, the move is, you know, probably ready for a consolidation or a bit of mean reversion back to the basis, wherever the basis ends up when it begins to do that, maybe even the lower first. Now, the lower first down here is right at, well, it's not right at, it will be above this low, this most recent higher low wick at 36,715. It's currently coming in at 36,622. At today's close, this is going to be above that low, maybe even towards the close open. I'm not quite sure, and that's at 37,241. Now, that's a good thing. If Bitcoin were to come back down and retest, anytime you see a basis lost, if it comes down to a prior higher low and you see a lower standard deviation directly in line with that or above it, it's more likely that that prior higher low will hold up at least on first pass. Now, I'm not looking for this thing to dump straight out either. Now, granted, momentum is pointed to the downside, but we could very easily see a momentum reset back to the upside, 44,540 obviously being the momentum pivot there. And this is not, this is actually a different indicator here. So let's show you the one that you guys have access to, and that's the BA reverse Stochastic panel. And this is a free indicator, not made by me or anyone I know, but I hear stuff going on in the background here. Oh, hey. Sorry. All right. So I am looking for this to get continued, you know, to continue to hang on the highs for a little bit longer, as long as it meets the criteria of staying above those two weeklies, 43.2 to 41.8. The 2-day, which is closing today, with today's daily, is also up there, 43,272. So 43.3 is the momentum pivot. It's still pointed to the upside. That's going to be right on top of price action after close. But what's more important here is this compression that happened on the bands to re-expansion, and the 2-day is still trading above the upper second standard deviation. If it closes above here, and that's at $43,000, then that is likely going to move to somewhere around the previous 2-day close, which is that 43,764. So 43,764 is the close on the 2-day candle. We're likely to see the upper second standard deviation around that area when this opens on Saturday's candle. And, you know, if price is trading above there, that's going to make the highs still available. Mean reversion back to the upper first is at $40,000. It's actually at 40,300. So this is likely to be somewhere around 40,500 to 800, making it an area to be aware of to the downside if we do see the upper second lost, and or if we see the upper second, price goes sideways at the highs and the upper second gets above price, then the upper second becomes the most likely area of interest to the upside, and the upper first becomes the most likely area of interest to the downside on this particular time frame for the 2-day. Now that would be for closes because we're looking at this as expansion, and that any kind of downside move would be mean reversion. In this case, we're looking at 79 over 54. So this has plenty of legs left on the 2-day here to continue testing the highs and higher, even with a pullback in between. This was quite nice compression. This is kind of beautiful, to be quite honest. This is what you want to see. This candle right here, obviously it was a breakout, but it was telling you that this was going to march at least for the foreseeable future, as long as it's above that upper second in the lower term time frames, and it remained above there. So looks very good. 3 days going to be closing with today's candle. We can see that the upper second is right above price here at that area that we talked about, and that's at that 44.4 to 44 to 44.5. In this case, that's where 44.5 is, and the upper first is at $40,000 or so. So if that is lost, we can see the basis is coming in right here at the bottom side of this order block of the move up. So beautiful, beautiful order block. If you want to highlight this, especially on higher term timeframes, you can see the bottom side close of this was 35.5. And then we see that the top side was 37.140. Or you can take a wick to wick, and that's at 34.750, which is a weekly support area. And the top side is just shy of $38,000, coming in at 37.5. So that is a very good area because we can see that the 3-day has the basis rising right to the bottom side close of that order block. And that's coming in at 35.5. So if we do see the upper first at 40K lost on a close for the 3-day, then I would be looking for this to be a viable target wherever the basis is. Now, likely this is going to be above that area, probably somewhere in the thick of it up here at around the mid $36,000 region, but looks very good. The lower first and it is well above the prior higher low. We can see that the lower second is likely to get above there as well, meaning that if Bitcoin were to get a hellacious dump down, it would run basically, in a crash scenario when you have expansion already going on. So we have expansion already kicked off, which means that price volatility is picked up, and volatility is direction neutral. But in this case, if you're above the basis, it's volatility to the upside, and below the basis, it's volatility to the downside. But if we were to see like a nuke on price, something crazy happen, this would be the likely area to look, is somewhere around the lower second, as they do act as either continuation or reversal zones. And being this expanded, if it were to crash, which I'm hearing a lot of crash talk, which is why I'm bringing this up, then I would be looking back down there. I think, personally speaking, from what I'm seeing, I'm more biased towards this sticking around the highs, possibly trying higher before any kind of sustained mean reversion. In this case, you can also see on the 2-day, the lower second is well above the previous higher low here. You could throw on a swing chart, and you could call this a higher low right at the lower first as well, if you like, for structural purposes. On a swing chart, it's probably going to point that out. In fact, we do have an indicator for swings, and no, it doesn't even point it out there. So the previous higher lows back here at that 26,500 level. Same for the 3-day. No, the 3-day, of course. Of course, the 3-day is going to get the one right here and call it a higher low. And that's the wick low at 34,750, which, to be fair, I would probably be looking for quite a bit more downside if that area was broken down below. I would be looking for failed bounces unless we saw a nice bull div that popped things back up above the most recent highs. In this case, structure looks beautiful. Expansion looks beautiful. We see that the 3-day is also getting very nice expansion we're going to see this continue to get expansion, and we're likely to see this confirm with the moving average. So we already have expansion, and the moving average is the next piece that we want to see turn up, basically. And we're likely to see that at close today. So that's just confirmation that this is likely to remain on the highs, come back to it later, probably get daily mean reversion in between, and or consolidation. And in the case of the 4-day, we see that it's actually in a cool down while consolidating between the upper first and upper second standard deviations. And this means that this is strong, okay, because the Bollinger Bands are very, very wide set here. And I want to give those of you who do maybe understand a little bit more about this than others, I'm going to give you a tip that have been for those of you that use this indicator and are familiar with it. When you see Bollinger Bands spread out like this, and then you see a cool down while it's holding either above a upper first, and this is basically what we saw in Dixie on the daily, right? You're looking for bearish divergences, and we wanted to see like 3 or more to get that daily top to be solidified, and then look for a little bit of consolidation and then breakdown. And that's exactly what we saw. Well, you may recall that on the daily there, Dixie was just using the upper first as a support, and every once in a while, because it was a daily, so you're likely to see this on a daily more than a 3-day, although you will see it on 3-day charts as well, and 4-day charts, so on and so forth. But a dip back to the basis is still very strong in terms of trend and volatility. But when you see a cool down like this, if we were to see price, get expansion, this would usually be within the Bollinger Band set here. And that means that, like, let's say we started to see price expansion, it's only going to occur above the upper second at this point, or price expands down or gets the volatility picks up, BBWP volatility picks up on a downside move. But because the Bollinger Bands are nice and spread out like this, that's where you're looking for these key levels on the from the Landy Bands, not BBWP, but the Landy Bands, because it's going to give you the first, if the first standard deviation breaks down, then you immediately have eyes on that basis as the next available target. And in this case, it's coming in at $33,800, almost $34,000. And then below there, the lower first and the lower second, and so on and so forth. And you're more likely to see reversals off of these standard deviations to the downside when it is consolidating between the upper first and upper second. And then you come back to it and you wait for compression before the real move gets rolling. So you could see like a big spike down if it were to. This is theoretical. I'm actually not looking for this, but right now at least. But if price were to dump all the way out to the lower first or lower second, would be bad for structure. Obviously, it's be a trend change or a trend break and then possibly a trend change. But the real move, the one that's going to be the sustained move, is going to be the recompression of the bands and then re-expansion. Because you're likely to see those areas hold up, price recovers for a little while, and then you look for lower highs and so on and so forth for trend to form, for resistances to then, prior supports become resistances, and then for volatility to pick up, and then you check on your momentum direction there. And in most cases, it's going to be, if that scenario were to play out, be to the downside. Now, that's just an example. That's not necessarily what I'm looking for in price, but in this case, if we see this cool down further, this is a 4-day time frame, so it's going to take a little while. But if we see this cooling down further, and we do see the bands begin to then like squeeze sideways and up with price, kind of like what we saw on the daily, it's going to be very, very bullish. Let's just put it that way. It's going to actually maybe even put the kibosh on potential areas of interest for pullbacks to the downside and just get continuation to the upside. That's just a point to look out for 4-day over 4-day closure. Now this one is going to close with the weekly, so this is going to be something to watch coming into Sunday. And of course, we're going to get quite a bit of information with the 2-day and 3-day closing today. We're also going to get information after the weekly that's going to kind of give us an idea of things as well here on the 5-day. You can see that, it is still maintaining high volatility here. We can see that we are pushing the 5-day, or Bitcoin is pushing the 5-day upper second standard deviation. I'm not Bitcoin, and I don't think you are either. So in this case, we're seeing it trading right at that upper second, which is coming in at 44.1 right now. It's slightly above it. And that is only going to get continued expansion to the upside. Now it will also continue to pull that upper first up, and the upper first is above this little consolidation breakout here at 38.5, which is the monthly. So mean reversion back to that area, perfectly fine. We're likely to see the basis now tick up to somewhere around this consolidation, the sideways and up consolidation, maybe even just slightly below the beginning of it right there at 33.8. But it is currently at 32.4. So I would look for it to head somewhere around the $33,000 to $34,000 area for the basis, provided Bitcoin closes somewhere around this upper second standard deviation. And the lower first is above this higher low back here. And it's kind of right at it, 26,500. So I would be looking, and we'll cover this on Monday, but we'll have to see where the bands end up after the close open. But I'm waiting for this to get a little bit further up the lower first to kind of get above this breakout. And then, man, you got prime mean reversion targets. Doesn't mean they're going to get hit, but they're primed targets for when, if and when price were to head that way. In this case, above the upper second, basically where Bitcoin is trading now from the 5-day perspective, if it's above that upper second, it's just continuation, at least for the next 5-day candle. The upper second standard deviation on the weekly is at 42K. Go figure. That's also one of the key areas that I've been talking about. 43.2 to 41.8 is the main area that Bitcoin needs to hold to preserve its opportunity to keep testing the highs and higher. If it does fall back below there, then we're looking to some deeper targets to the downside. Specifically, I of course will have an updated version on the Bitcoin in 60 seconds videos, but you've heard these targets over and over and over and over again. But if we were to see this area lost, the upper first, then we're looking right back to $39,000 to $40,000 at the daily basis. The monthly just below for a retest at 38.5. If that area does break down, though, I would be looking right back to this weekly. This was the weekly that we were talking about. Bitcoin needs to close above there, and then we're looking at things likely testing, that monthly, weekly, and then there, where we are currently trading now. This is a very important weekly at 37.7 to this monthly at 38.5. We want to see this area hold up, but if it is lost, then we look to the last daily high or low, somewhere around $37,000. You'll see that the wick low is actually at 36,715, and the close is at 37,250. I'm just splitting the difference when I say $37,000. So somewhere around that $37,000 area, and we are starting to see that daily lower first get above this weekly at 36.2. So it's going to give us a bit of a range. In fact, it's likely to be somewhere around this low. It's already basically right by it. It's at 36,620, right? So this would be the next big area, though. This weekly at 37.7 to the weekly just below at that 36.2 to 3 area. Below there, and I would be looking for a retest all the way back down to the monthly at 35K and then 34,800. Now, I did just get a question in one of these, the non-public chat here, because I have some private chats. It's not that I'm trying to exclude anyone. The private chats are for people who are at work that cannot access the streaming services, either on YouTube, it's blocked or something like that, or Twitch. And in this case, worst case scenario for price, when looking at structure, it's really going to come down to, we got such a perfect retest of, it's going to have to be, it would have to be somewhere around $25,000 to $30,000. In fact, I suspect that some of the breakout areas would be a little bit more, um, a viable areas to target, like at worst case scenario on a dump off. If we were just to look at the swings, you've got 3 swings. This was a big area of resistance on the 2 highs over here. So this would be the next really big logical area, somewhere around, $28,000 to $30,000. If that broke down, then I'd be looking, $25,000 again. It's just such an important area with the 2 highs here and then the 2 major lows. But I don't think, if this is going to do what I think it's going to do over the next, couple of quarters, which is take out the all-time high, and the next couple of quarters, I'm talking quarters, maybe, there's still an opportunity. There's always an opportunity for it to happen this quarter, but not the first thing I'm looking for. So, first quarter of next year, second quarter of next year, I am looking for, this high up here to get ran at, 48. That's more likely. Even Bitcoin has that as a viable target right now. That's one of our upside targets for the local move at the highs here. But over the next couple of quarters, I'm looking for the all-time high and higher. So I would highly doubt I would highly doubt that we would see a retest of $25,000 if that is what we're going to see occur in the coming quarters here. Now, that doesn't rule out like some kind of a crash scenario where a wick hits it, but more than likely I'd be looking around, this is such a big area. There was major weekly swing lows here. There's 1, 2, 3, 4, weekly swing lows, and then 2 weekly swing highs in that area. You can take the closes to wicks and just kind of give yourself a range there at 30,000 to 32, and that is kind of the more logical area to be looking for on a big move back to the downside, which would be mean reversion. That's what I'd be looking for. I do think that we're more in this phase right now than we are any other phase. I pointed out the 2016 stuff as well as already. That is a possibility where we get a 3 candle high in the monthly that just comes down and holds like the monthly upper first. And that is, I think, a viable thing to be looking for, especially if we see a close above the upper second. If we see this monthly close above the upper second, already this is from a monthly point of view, this high here at 48, 2 to 5 is already a monthly target. Like, it is a viable, likely upside target. As Bitcoin is trading above the monthly upper second standard deviation. There's no ands, ifs, or buts about that whatsoever. So, but if we did see a swing of it and then a bear candle and then another down candle, I'd be looking to the upper first standard deviation, which is at 33,350 right now, maybe a wick below it or something, right? This is, we got it back here in 2020. And for the index chart, we can go and look, and we can see we got that slight wick below it in 2016, which is basically what I'm looking at as being a similar setup to what we're seeing now, just as something to reference. It's not that it has to repeat exactly that or anything like that, to be quite honest, but that's the most likely scenario if it were to just swing this high and then we see a bear candle come in on the monthly. As it stands right now, it's sideways and up. That is the name of the game. You can't fight it. It's only just getting started too. $38,000 is the monthly momentum pivot, by the way. The volatility is only getting started right now. So yes, the monthly momentum pivot is way up there, but the biggest moves come in the overbought and oversold zones. So in this case, this is a plus, not a minus for the bulls there. Yeah, I think I covered just about everything I wanted to cover today for Bitcoin. What I'm gonna do is, it's a Friday. Let me go ahead and check on the chats here. Excuse me while I move this increasingly creaky sounding microphone stand. Let me go look in the chats for a moment. before moving on to Dixie and see what everybody's talking about. Let's see. Yeah, if you are in YouTube and you would like to chat, all you got to do is, sub the channel and you can come in and chat. No issue at all there. Cool. Thank you, Ivan, for letting me know about the microphone. Hi, Roka. Hi, Spin. Hi, Sam. Hello, Don. Good to see you all. I know that there's others that are watching. If you do want to come in and chat, we are going to, as if I'm more than one person, I'm going to take requests at the end of the stream here. But if anybody has any questions in there, let me know. One thing that was very interesting, I got into a little bit of a back and forth conversation with one of you, but not like in a bad way. It was actually a very good conversation because this is important that you understand. One of the bigger accounts on X had noted the moving averages. And in this case, this was a 50 simple. They're looking at the golden cross. So, and that's a 50 over 200. And it would be the first time in Bitcoin's history that the 50 would actually have to cross back over the 200. And they made it sound like it's imminent. And one of the big things that I want, this is the 200 EMA. I want the 200 SMA. All right, there we go. And they made this cross sound like it's imminent. And right now, as it currently stands, if you wanted to project what Bitcoin's closing price would need to be for this to get that golden cross, you'll see that the number is very far away. So in terms of this weekly, they were looking at, they basically their post kind of made it sound like it, didn't directly say it, but it made it sound like this cross is going to happen this week, and it's not. It will get closer, but we're going to see both the 200 and the 50 simple moving average rise. I won't bore you with the mathematical details here, but there is an indicator that I referenced actually earlier this stream, and it is it's Caretaker's moving average crossover, and where is it? There it is. CT moving average crossover indicator by the Caretaker. All right. So with this indicator, it's moving averages, right? And if you come in here, that's mine. Which one let's go here. You can come in here and you can change some settings on this. So we can turn on and off the moving averages here, but we just want the 50 simple and the 200 simple. And that is going to be MA number 7 and 8. We can come down here. There is an info box. You do need to turn it on these days. So moving average crossover info box. We can turn that on. And then we can pick which pairs we want to see the price level for that cross. So in this case, I'm just going to do one pair. I'm going to do MA7 because that's the 50. And then I'm going to do MA8 because that's the 200. And it's going to project what price would need to close at this week in order to get a cross. That is currently at 128,196. It changes in real time because it's the further Bitcoin trades up, the further the moving average is going to basically adjust, kind of wiggles around a little bit basically during the week. But when this closes, this number here is going to come down substantially, and probably in large chunks. But as it stands right now, this cross is not imminent. It's maybe we looked the next week or the week after, but the way that post, that it's engagement farming, they know it's not going to cross this week. But I had pointed out that the number to actually close and get a golden cross this week would be $128,000. So I did want to clarify why or where that number comes from. That's what this is over here. And all I did again was just use the, this is my trend checker because I still have it on. I just used Caretaker's moving average crossover, just turned on the 50 and 200, made sure the info box is on, and then show me when the MA7 crosses the MA8. So, and they're both SMAs. So in this case, there is another way to actually somewhat project. So you can do predict MA. So if we want to predict wow, it's gone. No way. You know what it is? I bet you it's predict SMA, and I'm just being a jerk. Yeah, SMA prediction. Maybe I'm just stupid. All right. So we can turn on an SMA projection indicator. So it is just SMA prediction in this case, and we can set the length. We can grab 2 of them. So we'll turn off Caretakers, and we can turn on two of them, and we can make the other one a 200 SMA. And we're going to say that price future change, we're just going to leave it at what it, if price was just up here right now and stayed around this price, when would they cross? Well, the earliest that they would cross is, 1, 2, 3, 4 weeks from now. And that would be on January 1st. So that's, I'd mentioned in my chat there with, it was actually, Don, you're here. So it was with you. That I was looking around somewhere around the first quarter of next year. This would literally be the first quarter of next year. So that's when when it's predicted across right now. Now you do have to understand that if price moves from here to the downside, that's basically the earliest that it could cross right now would be January 1st. But if price moves to the downside on the weekly, then it probably pushes it out another week or so. I did want you to know, Don, I understood what you were saying 100%. It's just that you may not have understood what indicator I was using and why I was using that. So I did want to show that here. And I believe, Don, you'll have to let me know, but this is probably pretty much directly in line with your predictions or projections, I should say. So that is, just to kind of, I wanted to pour a little bit of cold water on the narrative that it's going to cross this week, and that's kind of what they were implying. That's all. So yes, the cross is coming in soon. You're going to see that number of like a moving average crossover number come down substantially, even in this Sunday's closure. So I would check back in on it. And I'm getting a question here. It says, hey, can you show what the trend checker portion of your indicator actually is? Sure. Yeah. Awesome. That's a good question. I don't think I've shown that in a long, long time. So the trend checker, let's turn off the Bollinger Band related stuff. So that would be the upper, second, and third shapes. We can do EMA trend above, trend below, trend break above, and trend break below. And then I'm going to tell you the secret sauce behind this. So let's go ahead and go to an hourly. We can see that we have green diamonds above price here. This is indicating that this is a bullish uptrend still. When we see those green diamonds go away, we are coming into a neutral trend. When they resume, we're in a stronger or more likely upward angled uptrend. When we go back here, we see downtrends. So we see the uptrend kind of weaken, the green diamonds go away, we become trendless from this particular indicator's perspective. Obviously, this is a downtrend, but it's losing MAs. And in this case, we see these yellow label down and yellow label up, and then yellow label down, and then we get some red diamonds here indicating that this is a bit of a downtrend or a downward angle, but then we see a move back above to break. This is called a trend break. So a trend break to the downside, basically breaking down from this area over here, and then this breaks this area right here, and we get a break, and then we get bullish indications above the candles, a little bit of trendless, no breaks to the up or downside, even though you see this local area broke. And now let me show you why this works the way it does. That's because it is very simply an indication of where our MAs are. And in this case, it is a 9/21 and 200 EMA. So let me go ahead and explain this real quick. So when the 9 is above the 21, you will see green diamonds above price candle closes. When the 9 is above, and only when the 9 is above the 21 and the 9 and 21 are above the 200 EMA. Okay, so we're seeing strength above the 200 EMA. The green diamonds indicate that the 9 is trending above the 21 EMA. When we see the 9 below the 21 EMA, like over here, we can see that it loses the green diamonds, meaning that you need to be warned. The 9 is underneath the 21 EMA. We're looking for mean reversion back to the 200. It gets below it, spikes above it, chops around it, and then it breaks down below it. And once this candle breaks down, the next candle, it gets the label down that it is a confirmed breakdown below the 200 EMA, and it has broken structure. We start printing red diamonds. Once the 9 and the 9 comes down, you get and the 21 comes down. You'll see that when both the 9 and the 21 are down below the 200, we get the red diamonds. When they break back above, 9 breaks back above the 21, but below the 200, we get neutral, a neutral signal, so no indications there. Once it's a confirmed breakout and we get a subsequent close above, so we had one break above on a close, and then the next close comes in and confirms basically that we are staying above the this candle. By the way, it doesn't wait for close. This candle close above the 200, the next candle is going to automatically have a yellow label up above it. Once the 9 and is above the 21 and you're both above the 200, we get the green diamonds. So this is basically checking the general trend. So uptrend and more likely to remain an uptrend. And then we've got neutral to a bit of a downtrend, trend break back to the uptrend, and it's been an uptrend ever since. We did get a little bit of a neutral read here on the hourly, but look how far away that 200 EMA is. It's miles away. So, not really in danger of looking at this breaking into a sustained downtrend just yet. Now, the 200 EMA is going to get fairly close to price action, but look at the 4 hour. 4 hour is kind of where I like this the most. When you see that generally speaking, when you see that the 200 is flat, there's really no trades to be had. When it is angled down, that's when you can take okay, there's some good trades here and or mean reversion back to the 200 if you're a counter trader. But it's just generally to see where things are. Are we breaking down below the 200 EMA? Or are we remaining above it? Are we trending down or are we trending up above it? So basically a breakdown or above, trending above, this shows strength. Breakdown below, it shows weakness. In this case, this wasn't weakness. You take into account all of the other areas of technical analysis. This is just to check trend. I don't use this to trade. This is simply there to just give me a little bit of extra information. But thank you for asking. And it was a request, so I added that. There's also a, by the way, if you ever want to turn it on, there is a super trend here and you can customize it. You do need to go to the style tab to turn on the super trend. It's just super trend midline, super trend uptrend, super trend downtrend, and you're more than welcome to turn that on and play around with it. I don't really use super trend, but that was another feature request. And again, this is all just because people, there's people who don't have trading view plans that can support a bunch of indicators. So if you do want to, have access to pretty much everything you would need, generally speaking, it is here in one indicator, so you don't have to add multiple indicators to your chart. So, yeah, good question. Thanks. All right, cool. Let's go ahead and get back on the daily here. Let's go ahead and take a look at Dixie. Dixie did spike right back to this local high. We had mentioned that we were looking for about 104.21. If it did close above there, then we're looking for like 104.58 to 104.69, possibly even the 105 region. Right now, this is compression on the daily for Dixie. Not looking for too much else here until we see sustained closes above the basis that then take out that upper first and specifically take out this area here. So with Dixie, we're looking at 104.55 to this low. So it would need to take out the wick high on a close, and then this low on a close would need to be recovered to really start targeting the lower high up here. So somewhere around 104.55 to 105.069. Go figure, right? Now this did get a closing trend break, but you can see it still has not passed this local wick, so it's still got to get above and close above this wick high here. So if you want like an area, green means go. Above here, it needs to, and then we can start targeting those areas of interest. And you'll note that the upper first is going to be right around this wick after close today. So in this case, it has not closed above this wick high locally at the 104.21. And until it does, it's probably going to consolidate, maybe even retest the lows. To the downside, I would be looking to the lower first, somewhere around 103 to 103.20 or so. That would be down here. If it does drop this local wick at around 103.06, though, on a close, I'd be looking right around the lows again here by the lower second. I would, somewhere around, 102, the deeper 102 area to the actual close there at 102.65, maybe even the wick at 102.46. If it drops that, we're looking at 102. That would be the next big area of interest to the downside. I don't really need to turn on support and resistance for that to let you know. We've talked about this one a lot. This is also the lower first, and I know I've said this a lot, but for those that say that Dixie is going to nuke, I would say it's a little premature to say that it's going to nuke until we see a lower high. If this paints this low here on the weekly, we've got a trend break and then a higher low. So the next logical area would be to look to this weekly order block right here, somewhere around the 104.84 to 106 region by the upper first on the weekly. Above there, it's going to run this high, and if it gets above this high, then it's a trend. It's a full trend at that point. Higher low, it's got a higher high, higher low, higher high, and I'd be looking for it to leg up somewhere around 108 to 110 or so. If it does take out the wick low, it would be 102, and then eventually somewhere around the lows here, 101 region. Come back to it later if it does break down and actually nuke. I don't think that's what we're seeing though. Weekly is going to turn up on any close above 105.89, and that criteria is going to come down, especially if this sets a 3-candle low. So that's when I'm paying attention to here with Dixie. So it's still going to be pressured down, though, below that 105, 90, 106 area. But that's likely to get, into the, 104, 105 area as the pivot after close. So, and again, I can't stress enough. Yes, it's a lower high in the monthly, but as long as it's above 101.40, it's looking fine. This is also coming into contraction after a big move up. This is a consolidation. And, this was a higher low, lower high. That's what everybody's looking at. And then I caution people when we look at the quarterly, because that's a higher high and this is a higher low, and this is a back test of that higher low as it stands right now. So that is something to be aware of and something to pay attention to as we come into the end of this month and the first quarter of next year. Gold is hanging by a thread on some of the areas that we talked about. So we were looking for 2,000. It's trading there right now. It's right around this high is where it spiked down into at 1997. So basically $2,000. If it does trade down further from here, you can see the lower first has now come up to, slightly below, but it's at 1973. We would like to see it somewhere around 1980. That's where we, as in me and the people who trade gold, want to see around 1980 hold up. If it does not, then it's looking at, it's starting to get into dangerous territory for trend. And that would be, taking out this wick low at 1965. If it does that, then we're looking back to the higher low down here. Not out of the question to go test 1940, 1950 area, but if you want to see further upside sooner, you want to see 1980 hold at worst. So if it does close and lose the basis here, that is going to be the next area to pay attention to. 1965 to 1980 is going to be the zone. Now, that would be on closes below $2,005 today. From the weekly perspective too, you want to see this area hold up on closes. This is quite a strong rejection, by the way. That kind of wick is usually a top signal, and for those that were able to trade it, we've done well in calling that out. It got very aggressive. I was looking a little bit around 2,100, so it outran that by $50-$60. So, but it wasn't a hard call to sell off from there. That is, new highs as well. So it's not out of the question that this thing could mean revert for a little bit longer while things cool down. Man, there we go. English. My first language, as a matter of fact. Now, if this upper first is dropped at around $2,000 even on the weekly, then I would be looking for a run back to wherever the basis is, and that would be around currently 1940 to 1950. So it's coming in at 1945. So that there is confluence there. The weekly is starting to turn down on momentum. Obviously, you put in a really big spike high like that. This is unsurprising. So 21.25 is the momentum pivot there. And it's really about the monthly, because the monthly is what gold bugs want to see hold up. And that's at 2025, but $2,025. So that is something to track very closely coming into the end of the year. And that's also going to play into the quarterly. Now, the quarterly is likely to turn up. So I'd be looking for a couple more spikes into the highs here if the quarterly does turn up. That's all the way at $1,900. So I'm not looking at that like falling apart unless something drastic happens and, the remain. Excuse me. Whoa, that snuck up on me. The remainder of the month. So let's go ahead and look at traditional markets and then see if you guys have any requests. Well, this is interesting. Dow is still playing around the highs. 36,280 is going to be the number to beat to the upside there, and it's trading right around there. In terms of momentum now, this is a consolidation, for a couple days. This is really pretty, to be quite honest. Again, just upper first and upper second as a consolidation zone on the way up. Does keep that upper second available as a target at around 36,635, 36,7. And again, if we look left, that is right at the high before the all-time high. So, right? No. Yeah. Yes, that is correct. So I'd be looking for a new all-time high if it's going to remain above here and break out of this area. 36,292 is the wick high here, so above there, and I'd look for around 36.6 to 36.7 and beyond, to be quite honest, because if it gets above there, it's going to be expansion again. If it does lose the upper first, looking unlikely in today's candle, but you never know. We're looking at, it's 25 minutes left. They could dump it all. The upper first is there at 36,000 below there, and I'd be looking for somewhere around the basis, which is coming in at this little 4-candle consolidation, and that is at 35,420. Meme numbers all over the place all the time in traditional markets. You'll always find it. I'd be looking 35,4 to 5 if the upper first is lost coming in the next week. Right now it's looking like it's going to close very strong. Looks very good. If it closes above 36,281, it's going to push on through. Looks pretty darn nice. And again, that's because of the weekly. The weekly's still up above 33,730 rather. And the 2-week is going to remain up above 34. The 3-week, of course, is going to be turning up on the next close, which is coming in 2 weeks, above 35,226. So if it can remain above like 35.5 or the upper first here on like even the 3-week, it's going to look beautiful. And, likely to run the highs and higher. That doesn't mean that it's just going to march on for months and months and months, and the next couple of quarters are going to be the greatest bull run we've ever seen. But at minimum, swing, the highs and higher and then come back to it. I suspect that, we are doing the same thing, and a nice consolidation on the highs here with a nice higher low. And this looks very pretty. We're getting compression right around the area that you'd want to see it. And we're going to get a very clear picture on Monday of where things stand. So if we'd be looking for, in this case, we're seeing expansion to the upside on the weekly for NASDAQ. Then we're looking at the possibility on the daily of getting either expansion to the upside above the upper second, which is going to be right around the highs here. At around 16,200 is where the upper second is coming in. It's currently above the highs, but this is going to compress down further, I believe, here coming into Monday's open. But closing above the upper first is going to indicate that we're going to go test that area on NASDAQ. Now, if it does start to lose this last low, it would be below the lower first, though, and that is coming in at 15,735. And then if it closed below the lower second, then we could look for daily expansion to the downside into support here, which would simply be mean reversion on the weekly. So, and otherwise, more of an opportunity for bulls than not. And this would be if it were to drop this low, then we'd be looking at the lower second there at around 15,600, and then below there we'd look for expansion or mean reversion on the weekly to like 15.5, and then low 15,000. That's not my first take on this. It looks pretty good, especially if it closes above the upper first. It's above the basis. It's likely to turn momentum to the upside on any close today above at least an initial cross to confirm today. on any close above 16,060 bucks. It's currently got a little bit left to go here at 16,090. So it's still pushing up in the lower term time frames, and this is a very nice compression. And we're getting the etchings of expansion. It's confirmed as well, but it's not mature enough for me to call it above the local highs, though. And this is going to get a shot to the all-time high and higher. Quite frankly, that's what I'm looking for. If it confirms the expansion above the upper second. 15,000 is going to be the weekly beautiful expansion, upside expansion in this case. Yeah, this is looking like an all-time high trip. And NASDAQ is painting it more than most at this point. Let's go look at SPY. Yeah, so no, SPY is even holding the overbought zone. 460 is going to be the momentum pivot, and SPY might be the one giving it away here. If it closes above this high at 460 or 459, then we're at 460 right now. If it closes up here, 465 is the next big target. A break at 463. We've talked about this before. 463 to 465 is going to be here. Next area above there, we're looking 470 to 480. And then 490 and 500 above there. Yeah, we're looking at the all-time highs. That's what this is setting up for. Doesn't mean it can't fail here, but this is setting up for the all-time high. So be aware of that. Basis is now above it's above the high here. Very good. We see the lower first even above this gap fill. Everybody was looking for the gap fill. Like I said, it's pretty simple criteria. If we drop the consolidation, that's when we get the gap fill. We didn't see that dropped, so you don't get the gap fill. In this case, now the lower first is above it. Lower second's probably going to be above it as well pretty soon. So yeah, looks beautiful. Looks like at minimum locally closes at 460. We're looking for further upside targets to around 463 to 465 above there. Looking 470 to 480, and then new all-time highs 490 to 500. To the downside, if it does happen to drop 453 here to 450 or so at the basis, then we're looking at the lower first there at 448 as being the kind of line of defense. Right around this low wick here. If that's dropped, then it's going for a gap fill, and that's where we can start looking at 445 to 440. But that is not the most likely thing to happen when looking at this Friday closure, especially being above the upper first on the weekly. Upper second is at 466. This is going to expand again as volatility picks up because this is trading above the upper first standard deviation, and it's more than likely going to close today above there as well in the next 13 minutes. So this is looking like it wants to test that 465 area, probably 470 and 480 after. So, and then we're looking at, yeah, man, this is, everything is telling me this is going for it. Maybe it pulls back a little bit in lower term time frames next week. We'll see, but it looks like it's setting up for continuation based on today's close. Nice strong close. Doesn't mean that it can't continue to consolidate or even take out these lows for any one of these. But SPY's pretty strong, and then NASDAQ's the one that's painting the best picture in terms of volatility expansion. So SPY looks stronger in terms of structure, but NASDAQ's the one that's got the expansion on its side right now in terms of what's likely to be the most volatile when it kicks off. And Dow is doing Dow stuff. It's above the high now. Beautiful stuff, man. So if it can close up here, yeah, we're looking at all those upside targets we just talked about. Cool. That's going to wrap it up for today's bulk of analysis. If you do have any questions, comments, concerns, and coins rather that you would like me to look at. I'm having a tough time talking today. Let me take a drink of water. Go ahead and jump into the chats and let me know what you would like me to check on. Please, one at a time. Looking at you, Sam. And I'm just kidding. I don't mind at all. If I have the time, I will try to cover what it is that you'd like me to look at. But most of the coins that I covered Wednesday, kind of doing what we talked about. For those of you that are just watching and would like to jump into chat, you're more than welcome to. If you want to ask a question or have me do TA on a particular asset, indice, or cryptocurrency, you can sub and jump into the comments. The only reason I have subs on for the comments is because of spammers. So Dogecoin. Yeah, we can look at Doge. The doggy coin looks good. I'm still got my 11.1 to 11.2 targets up here. We got a nice swing on the daily of 78 cents. Once we saw this area break, we had a bear candle right around this high at 8.7475 cents. But once it broke, we're looking for expansion to the upside. Next big area of interest was already hit, and it even closed above after wicking slightly above and to this high above it. If I can get above 10.5 cents, then we're looking at 11 to 11.2 cents up here. Above there, next major resistance is going to be around 14 to 15 cents. If it does drop back to this 8-cent region, we're looking to the basis. It would have to drop 9.14 to 9 cents or so, put in a high. I would say even, to even test 8.5 to 8.6 cents. Below there, I looked at the basis at around 8.3 cents to somewhere around 8 cents. If it drops that, still good, all the way down to 7.5 cents, believe it or not. Below 7.5 cents, though, it's running this low, and it's in dangerous territory for the daily trend. Weekly looks good, nice trend break. Yeah, this is targeting 11 to 11.2 cents next, to be quite honest. And then probably, basically 11 to 12 cents. And then probably pretty shortly thereafter, because there's a low and a high put in the same region. If this breaks, it's probably going to go on a run, probably like 14, 15 cents. And then above there, we're looking at these little spikes up to just below 18 cents. Right around. It's like 17.98, so 18 cents to 20 cent region. You'll see that there is a low right there as well on the weekly. So I'd be looking there basically above 14 to 15. I'm looking at 18 to 20 cents. Just one step at a time. For this move to be sustained, though, you want to see it remaining above about 8 cents on a close for the weekly. So that's my Doge take right there. Apt. Any particular exchange, Roka? Or Raka? I don't know how to say it. Roka, Raka. There's no C in there, so it's like I'm assuming it's Roka. Making a bold assumption, but and a big but, and I will not lie. No other brother can deny that I'm going to look at this on Binance for now until I hear what you would like me to words. I'm a wordsmith. Look at me. Looks good if it can hold the breakout. I mean, it expended a lot of energy. It used up a lot of daily volatility to get from this lower second, this little consolidation, and then up to the high again. So I would be aware that, if it could deviate. I would be aware of a possible deviation here. Let's go look at higher time frames. But to be fair, if this is above the weekly here, it's more than likely going to try up further, somewhere around this weekly up here. I don't know why this is. I always have to change these back, but all right. So I'd be looking somewhere around 980, 918. Yeah, I'd be looking somewhere around this next weekly high if it can sustain the breakout and retest. As long as it's above 736, the upper first, and these consolidation wicks around 6.675, it's looking good to keep testing up. It's above this prior weekly swing. I mean, this has a bunch of swings right next to each other. So as long as it's above 781, quite honestly, it's going to be sideways and up, in my opinion, to go test probably $9 to $10. What's that wick coming in at? The wick high is coming in at 950, but it's an alt. It can move fast, so I'd give it room. I'd say, if it can close the daily above here, $9 to $10 is in the cards. 8.5 is already, going to be the green is go zone. If it can close above 846 in the daily or next daily, and remain above this upper second, it's going to maintain its expansion to the upside. It's going to look really good. And my apologies. I read this as 96. It's 76. This looks good. This looks very good. This looks like it's going to continue its expansion to the upside to about $9 to $10. So my initial take on that was incorrect. Sorry. And in this case, the weekly, is getting expansion as well. It's already expanded, but it's trying to shift the weekly trend here. Man, if this thing breaks out above $10, it can go on a run pretty quickly, to $11, $12 over here. And then, $11 to $12 around this consolidation. What was the high at? To almost $15, yeah. It takes that out. It's going to go towards its local highs up here, $18 to $20 pretty quickly. Even. Maybe someday it'll even get back to this wick high up here at what is this wick high? Is this wick high really? It opened at 98 cents and the high was at $72.55, and then it closed at 980. That sucks. Oh, well, again, it's October of 2022, so I'm not completely surprised. But yeah, interesting. Looks good though. For a breakout, looks ready. To be quite honest, I think that this is. I'm assuming you're already in it, and I'm assuming you bought the lows, and you're looking for continuation. If I was to make a bunch of assumptions based on what I know about you, sir, I think you already know where this is headed, and it looks like it is headed up, sir. I would want to caution anything below that 781 though. For right now, in terms of this particular daily move, from the weekly, it looks fine. Yeah. Cool. Hope that helps. And as long as it's above 675, looks great. Below there, and it's game over for a while. Any others? It's kind of a quiet Friday for chat. I see a lot of people watching. But yeah, if there's not much else, I will let you all go. I know it's pretty late for some of you. And, oh, yes. I'm sorry. I read your joke and I read it the right way. I meant to chart it on Binance. For those of you that aren't familiar, Secretary Yellen knows all about Binance. Okay? No idea what Binance is, but she knows all about Binance. I'll look at Tesla and then I think we're going to probably wrap things up. I don't see too many people eager to chat right now. Yeah, that's Tesla. It looks like a stock. It is in a daily consolidation. Yeah, if you're taking like projections based off a break of 20 on apt, I would also be looking somewhere in the 50s. My bet is that there's probably a 1272. There's probably like a 1618 or 1786 up there as well. Tesla is experiencing some volatility here, but it looks as though earnings are coming up in January, and earnings here were a bit of a surprise. So, but we saw a nice low form. This is all opportunity on Tesla, to be quite honest. So, I would say, it's trading right around the upper first at 244. If it can get above there, we see compression as well. It's holding, as long as it's above this last, high on a close at 225 or so, it's looking good. That's also right around where the lower second is going to be coming in to Monday's open. If it can trade up from 225, I'd be looking at 243 rather, 244. I'd be looking at 250, 251, somewhere around this little breakdown lower high swing area above there, and I'm looking 260 to 265. Yep. And then above there, 270, 280 region. If it can take out, at any point, it takes out this 299, 300 high. When you look at the weekly, you'll see that this will have been a consolidation and then an upside expansion to, to some new highs. I'd be looking right back to the 400 area. In fact, yeah, this is nothing. In fact, this probably threw some bullish divergence on the weekly, didn't it? I don't know. I've been through every single one of Tesla's stock splits, so I have a lot of Tesla. I haven't moved on it in years. I took profit after like the first or second stock split. I took some profits, but I loaded back up on the lows. So it's been a long time since I've really even bothered to chart it. Yeah, this is all bullish divergence building off of this low here. Building off of this low here, sorry. So it'd be this low on RSI. Yeah, this is a bull div playing out. Where is the bullish control zone if it were to get there? 282 is the bullish control zone. So that's a little ways away from there, but it starts getting into the bullish control zone. That's actually probably going to be somewhere. Yeah, it's going to be around this high. I'd be looking for 300 to get ran over time from the weekly to the upside. And if it gets above 300, it's going to go on a run. Specifically 316, 320 region, it's going to go on a run back to the 400 or so, maybe even higher. If it does drop 220, it's back to the local lows and possibly lower. That would be below this high again, where it did bounce from at 200. Yeah, if it gets below 220, it's going to test around 200. And then I'd be looking, substantially lower, 150, 160 over time. Maybe even lower than that, but I'm not that's not my first take. I'd be looking back to this major low down here. From the weekly standpoint, though, this looks brilliant. Quite honestly, we've got some bullish divergence playing out. And if it even breaks local structure, you get early confirmation above like 280. And if it starts to enter the bullish control zone, and we've got momentum turned to the upside here at 213, yeah, this is set up to rise, barring, you know, daily reversals below 220. Above 220, it looks good to keep testing higher, to be quite honest. And 251 to 260 is the next daily target, and then from the weekly target, I'd be looking 280. 280 breaks, very good. It's gonna be very good. Bull party on to go test 300 to 320, above 320, run into the highs. One step at a time. Obviously, you take 310 to 320, and then 350 to 360 area around this high in the gaps, and then we're looking around the 400 area after that, because you'll start to hit higher and higher volatility metrics on the weekly, and that's going to provide for very nice moves. Yeah, looks good. I like Tesla. Where's my buy button? No, you don't buy this. You buy the actual expansion so that you have confirmation. If you weren't buying the higher low back here, which that's where the actual buy was for this particular mean reversion move back to the upper second. Got a trend change. Looks good. Consolidating above the breakout from the lows. I like it. I like it. We're going to turn music on today, so you're hearing all of them, like me cracking my back and all kinds of stuff here. My apologies. You're hearing every time like a beard hair hits the microphone, because like one just wants to hang on the microphone every time I get near it. My apologies. Let's actually go ahead and turn on the music, because I'm going to be doing the outro here soon anyway. Where's the music? Where did it go? All right, let's do that. Okay. So, I don't smoke weed, Ivan. This is tobacco. It's nicotine. Because in this room, I cannot smoke a cigar, which is where I would actually be smoking a cigar. But I am not. But if you are in chat and you've enjoyed the stream, just so you know, if you're coming in towards the end of the stream here, you can scrub back. DVR is available. It's just a hangout stream today. Kind of, did the bulk of our analysis, took a little break, and answered some questions after Bitcoin. But if we are just joining the stream, did Bitcoin in the beginning, answered a few questions, talked a little bit about a few things, addressed a few misconceptions regarding specifically a golden cross this week on Bitcoin, which isn't going to happen this week. Earliest it could happen, based on projecting the MAs, would be around January 1st, provided Bitcoin stays on the highs here and higher. It could happen earlier if Bitcoin really pushes up, but other than that, we did Bitcoin today, answered some questions. We looked at Dixie, we looked at gold, and then traditional markets, and took a look at a few of the coins, coin and a few stocks. So Friday's a chill stream. If you yeah. Oh, okay. So next week, if you do want me to cover bonds, I will put that on the list. Yeah, I'll just check on it today. Yeah, we had a nice move up in the 2 and 5 year here. Yeah, like I've said to you guys over the course of time here, the appetite for longer dated bonds are not there. Institutions just they want way over for that long right now in terms of bids. They're not willing to move. Yeah, they're settling for, you know, these lower and mid 4 region on the 10 and 20 year and 30 year, but you know, you got the 5 year catching up, playing catch up with the 2 year there. And 2 year is, you know, something that we can look at. Yeah, we'll do that on Monday. Sure. You know, we can look at economic data coming into the end of the year. I mean, we will, you know, more towards, you know, the post holidays in between Christmas and New Year's. I'll probably take a look at it, see where we're at. The big thing is I would keep a close eye on gold. If it holds 2K, that'd be a good thing. Yeah. Cool. Leave a like if you enjoyed the video, and if you are watching and not subscribed yet, go ahead and subscribe. I do a Bitcoin in 60 seconds short video in the shorts tab here on YouTube, and it's also posted to x.com under Crypto Landy. And yeah, come hang out with us again. We'll be back on Monday at 10:30 a.m. Pacific Standard Time, 6:30 p.m. UTC. So that's going to be the next live stream, but in between then I will have some shorter 60-second videos to update you on should I see something interesting happen in the markets here. And other than that, I hope you all have a wonderful weekend, and of course I hope you have a wonderful morning, afternoon, and evening. No matter where you are in the world, please trade safe, and of course, as always, stay safe. And with all of that being said, I'm going to stall for another minute here while I put on the timer. You're more than welcome to hang out, DVR the stream if you'd like to go back and see what I was talking about. And yeah, if you just want to hang out and listen to tunes, these will be playing for like the next 12, 13 minutes, and then the stream will end. And if you are, again, if you are on Twitch, which I do see a few of you guys over there, I do suggest that you head over to YouTube. It is Landy's Crypto Corner, and sub the channel and come in and chat with me there. As I cannot see the Twitch stream chat right now. There's an issue with the plugin, so but I do appreciate the support over there. Thank you guys. And yeah, with all of that being said, well, you have a great weekend again, and Landy out.